Welcome back to XRP on Moon, the channel where we break down the biggest, most explosive developments in the XRP ecosystem. And today's story might be one of the most shocking yet. Imagine waking up to discover that 2.6 billion XRP has seemingly vanished within just 48 hours. Not transferred in a typical sense, not clearly sold off, not even visibly redistributed in a way that retail investors can easily trace, but simply gone from where the market expected it to be. That's the headline shaking the XRP community right now. And if you think this is just another routine blockchain movement, think again, because what's happening beneath the surface could have massive implications for liquidity, price action, and the future trajectory of XRP itself. Over the past 2 days, blockchain trackers and on-chain analysts began flagging unusual movements involving billions of XRP tokens. At first glance, large transfers are nothing new in crypto. Whales move funds all the time, exchanges rebalance wallets, and institutions reposition assets. But this situation quickly escalated beyond normal activity. The scale, 2.6 billion XRP, is not just large, it's enormous, representing a significant chunk of circulating liquidity. And what made this event particularly strange was not just the size, but the pattern. The XRP didn't simply move from one known wallet to another in a transparent chain of custody. Instead, it appeared to fragment, disappear into less visible channels, and in some cases, land in wallets that have little to no prior activity. This has sparked a wave of speculation across the XRP community. Some believe this could be a coordinated institutional move, possibly tied to over-the-counter deals where large players acquire XRP without directly impacting the open market price. Others suggest it could be related to internal restructuring, perhaps exchanges or custodial services reorganizing their holdings in anticipation of upcoming regulatory clarity or major announcements. And then there's the more controversial theory that this could be strategic supply tightening, where large entities intentionally reduce visible liquidity to create pressure on price movement in the near future. Now here's where things get even more interesting. Historically, whenever large amounts of XRP move in unusual patterns, it tends to precede significant market shifts. We've seen it before: quiet accumulation phases followed by explosive price action, or sudden liquidity changes that catch retail investors completely off guard. The difference this time is the speed. 48 hours is an incredibly short window for such a massive amount of XRP to change status, and that urgency suggests intent. Big players don't move billions without a reason, and they certainly don't do it randomly. Another key detail that analysts are focusing on is the timing. This event is unfolding at a moment when XRP is already under intense scrutiny, with growing discussions around regulatory frameworks, institutional adoption, and cross-border payment integrations. When you combine that backdrop with a sudden disappearance of 2.6 billion XRP, it raises a critical question. Is this a reaction to something we already know, or preparation for something we don't know yet? Because in crypto, especially with XRP, the biggest moves often happen before the news becomes public. Retail investors, meanwhile, are left trying to interpret the signals. Is this bullish or bearish? On one hand, a reduction in visible supply could theoretically support higher prices if demand remains constant or increases. On the other hand, uncertainty creates fear, and fear can lead to volatility. The market hates not knowing what's happening, and right now, there are far more questions than answers. But if you've been in the XRP space long enough, you'll know that moments like these are rarely meaningless. They're usually part of a much bigger puzzle, one that only becomes clear in hindsight. What's undeniable is that something significant is unfolding behind the scenes, whether it's institutional accumulation, strategic repositioning, or the early stages of a major market shift. The disappearance of 2.6 billion XRP in such a short time frame is not something that can be ignored. And as we move forward, every transaction, every wallet movement, and every piece of related news will be scrutinized more closely than ever before. Because in a market driven by information, and sometimes by the lack of it, events like this don't just happen quietly. They echo, they ripple, and sometimes they trigger the kind of momentum that defines the next phase of the market. As the dust begins to settle from this shocking 2.6 billion XRP movement, analysts are now digging deeper into the on-chain data, and what they're finding is raising even more questions than answers. Because this isn't just about XRP being moved, it's about how it was moved, where it went, and more importantly, what pattern is emerging behind the scenes. When you zoom in on the transaction flows, one thing becomes immediately clear. This was not random activity. This was structured, calculated, and executed with precision that strongly suggests involvement from entities who understand the XRP ledger at a very deep level. What's particularly fascinating is the fragmentation pattern. Instead of one or two massive transfers, the XRP was broken down into multiple transactions, routed through various wallets, and in some cases, passed through intermediary addresses before landing in their final destinations. This kind of behavior is often associated with advanced liquidity management or stealth accumulation strategies. Large institutions, whales, or even coordinated groups tend to use these methods to avoid triggering market panic or drawing too much immediate attention. But ironically, the sheer scale of this movement has done the exact opposite. It has put the entire XRP community on high alert. Now let's talk about wallet behavior, because this is where things get even more interesting. Some of the receiving wallets appear to be newly activated or previously dormant, showing little to no historical activity before suddenly handling massive XRP inflows. This raises a critical possibility. These wallets could be part of a larger network being prepared for future use, whether that's for institutional custody, liquidity provisioning, or even integration into financial systems. The sudden activation of these wallets suggests planning, not coincidence. And when billions of XRP are involved, you can be sure this level of planning didn't happen overnight. Another angle that's gaining traction is the potential involvement of exchanges. In the past, we've seen exchanges move large amounts of XRP between hot and cold wallets, often without immediate public explanation. However, in this case, many of the destination wallets are not clearly labeled or publicly associated with major exchanges. That ambiguity is fueling speculation that this might be happening outside of traditional exchange infrastructure, possibly through private deals or off-market transactions. If that's true, it could mean that significant amounts of XRP are changing hands without directly impacting the visible market price, at least for now. And this brings us to a very important concept: hidden liquidity. In crypto markets, not all supply is visible at all times. When large amounts of an asset move into private wallets, custody solutions, or locked systems, they effectively reduce the circulating supply that's actively trading on exchanges. This can create a supply squeeze effect, especially if demand starts to rise. If 2.6 billion XRP has indeed been moved into less liquid or less visible environments, it could set the stage for increased price pressure down the line. But again, it all depends on intent. Are these tokens being stored, prepared, or eventually redistributed? Timing continues to play a crucial role in this narrative. This event didn't happen in isolation. It's occurring during a period where XRP is gaining renewed attention from both retail and institutional perspectives. Discussions around adoption, payment corridors, and financial integrations are becoming louder, and that naturally attracts capital. If major players anticipate a shift in XRP's role within the financial system, moving large amounts ahead of that shift would make strategic sense. It's the classic position before the breakout mindset that we've seen across multiple market cycles. At the same time, we can't ignore the psychological impact this has on the market. When retail investors see headlines about billions of XRP vanishing, it creates a mix of fear, curiosity, and urgency. Some interpret it as a bullish signal, smart money positioning early, while others worry about potential sell-off or hidden risks. This emotional divide is exactly what often precedes volatile market conditions, and in many cases, that volatility becomes the fuel for the next major move. What makes this situation even more compelling is the lack of official explanation. No major announcement, no confirmed statement, no clear narrative from key players, just raw blockchain data and a growing list of theories. In crypto, silence can be just as powerful as news. It forces the community to speculate, analyze, and sometimes even overreact. But for those who understand the game, silence often means one thing: something is being prepared behind closed doors. Now, as we go even deeper into this unfolding situation, the conversation is starting to shift from what happened to who might be behind it. And this is where things begin to take a much more strategic and potentially explosive turn. Because movements of this magnitude, 2.6 billion XRP in just 48 hours, don't just happen in a vacuum. They are almost always tied to entities with serious capital, long-term vision, and inside awareness of how the market is about to evolve. And when you start connecting the dots, a few very powerful possibilities begin to emerge. One of the strongest theories gaining momentum right now is institutional positioning. Over the past few years, XRP has consistently been at the center of discussions around cross-border payments, liquidity bridging, and financial infrastructure. Unlike many other cryptocurrencies that rely heavily on hype cycles, XRP has always maintained a narrative tied to real-world utility. And if institutions are preparing to expand their involvement, whether through partnerships, integrations, or regulatory clarity, then accumulating or repositioning billions of XRP before that shift would be a logical move. The key detail here is timing. Smart money doesn't wait for headlines. They move before them. Now think about this for a second. If large financial entities, payment providers, or even government-linked institutions are planning to utilize XRP in a more direct way, they would need access to deep liquidity without causing massive price spikes during acquisition. The best way to do that? Quietly move and secure supply in advance. This aligns perfectly with the fragmented transaction patterns we're seeing, splitting large amounts into smaller transfers, routing them through multiple wallets, and gradually relocating them into positions that are less visible to the public eye. It's not just movement, it's preparation. Another angle that cannot be ignored is the possibility of over-the-counter deals, also known as OTC transactions. These deals allow massive amounts of XRP to be bought and sold privately, without directly affecting exchange order books. If even a portion of this 2.6 billion XRP was involved in OTC activity, it could mean that ownership is shifting from one major entity to another behind the scenes. And if that's the case, then what we're witnessing is not just a disappearance, it's a transfer of power. New hands taking control of large portions of supply, potentially with completely different intentions than the previous holders. There's also growing speculation around custodial services and institutional-grade storage solutions. As the crypto market matures, more institutions are demanding secure, compliant ways to hold digital assets. This often involves moving funds into specialized custody wallets that are not actively trading on the market. If a significant portion of this XRP has been moved into such systems, it could signal long-term holding rather than short-term trading. And historically, when assets move into long-term storage, it reduces selling pressure and strengthens the overall market structure, at least in theory. But here's where things take an even more intriguing turn. Some analysts are beginning to question whether this movement could be connected to upcoming developments that have not yet been publicly announced. In the world of XRP, major news, whether it's regulatory clarity, partnerships, or technological upgrades, has often been preceded by unusual on-chain activity. It's almost like the blockchain tells a story before the headlines do. And if that pattern holds true, then this 2.6 billion XRP shift could be an early signal of something that hasn't hit the mainstream yet. Of course, we also have to consider the alternative perspective, the possibility that this is not entirely bullish. Large movements can sometimes precede distribution phases, where big holders prepare to offload assets over time. By moving XRP into multiple wallets, it becomes easier to manage gradual selling without causing sudden price crashes. This kind of strategy is often used to exit positions quietly while maintaining market stability. So while many are leaning toward bullish interpretations, it's important to stay grounded and recognize that the same data can support multiple narratives depending on intent. What makes this moment so critical is the uncertainty. We're dealing with incomplete information, fragmented data, and a market that is highly sensitive to both signals and speculation. But within that uncertainty lies opportunity and risk, because when major players reposition themselves, the market eventually reacts. It might not happen instantly, it might not be obvious at first, but the impact always shows up, either through price movement, volatility, or a complete shift in sentiment. So right now, the XRP market is standing at a crossroads. As this situation continues to unfold, the focus now shifts toward what this could mean for the price of XRP in the short to medium term, because ultimately, that's what every investor is trying to anticipate. And here's where things become both exciting and dangerous at the same time. When a massive portion of supply, like 2.6 billion XRP, suddenly becomes less visible or moves into unknown territory, it disrupts one of the most important forces in any market, the balance between supply and demand. And when that balance shifts, price reactions are almost inevitable. Let's break this down from a market mechanics perspective. If a significant amount of XRP has been moved off exchanges or into wallets that are not actively participating in daily trading, then the tradable supply effectively shrinks. Now imagine demand either staying the same or increasing, whether from retail hype, institutional interest, or broader crypto market momentum. What happens when demand chases a reduced supply? Prices tend to move upward, sometimes aggressively. This is what many analysts are quietly watching right now, a potential supply squeeze scenario forming beneath the surface. But here's the catch. Markets don't move in straight lines, and they certainly don't reward emotional reactions. Right now, we're in a phase where uncertainty is dominating sentiment. Some traders are seeing this as a bullish signal and are positioning themselves early, expecting a breakout. Others are staying cautious, waiting for confirmation, because they understand that large movements can also precede volatility spikes or even temporary price drops designed to shake out weak hands. This push and pull between optimism and caution is exactly what creates those explosive moments later on. Another critical factor to consider is liquidity depth on exchanges. If large amounts of XRP are no longer sitting in order books, it means that even relatively smaller buy orders can start moving the price more than usual. This creates a thinner market structure where volatility volatility increases. In simple terms, the market becomes more sensitive. And in a sensitive market, news, rumors, or even social media narratives can have an amplified impact. This is why events like this often lead to sudden, unexpected price swings that catch both bulls and bears off guard. There's also a psychological layer that cannot be ignored. When headlines start circulating about billions of XRP vanishing, it creates a sense of urgency. Retail investors begin to ask themselves, am I too late, or is something big about to happen? This fear of missing out, combined with uncertainty, can drive rapid inflows of capital. And ironically, it's often these emotional reactions that fuel the very price movements people are trying to anticipate. Markets are not just driven by data, they're driven by human behavior. At the same time, experienced players in the market are watching for traps. Because let's be real, crypto markets have a history of creating narratives that pull people in one direction, only to reverse sharply. If this movement is part of a larger strategy by whales or institutions, it's entirely possible that we could see short-term volatility designed to test conviction. Quick dips, sudden spikes, fake breakouts. These are all tools that can be used to manipulate sentiment before a clearer trend is established. So while the setup may look bullish on the surface, the path to any major move is rarely smooth. Now zooming out a bit, this event could also play a role in shaping XRP's broader market structure over the coming weeks or even months. If the tokens that have been moved remain out of active circulation, it could gradually tighten supply over time, creating a more stable foundation for upward movement. On the other hand, if those tokens re-enter the market suddenly, it could introduce selling pressure at key moments. This is why tracking follow-up movements is just as important as analyzing the initial event. The story doesn't end with the disappearance. It evolves with what happens next. And this is where patience becomes a key advantage. Because while many are looking for immediate answers, the real impact of this 2.6 billion XRP shift may not fully reveal itself overnight. It could unfold in stages, first through subtle changes in liquidity, then through shifts in sentiment, and eventually through price action that confirms the underlying trend. Those who understand this dynamic are less likely to react impulsively and more likely to position themselves strategically. As we bring this entire situation together, it's clear that what we've witnessed over the past 48 hours is not just another routine blockchain event. It's a moment that could potentially mark the beginning of a much larger shift within the XRP ecosystem. The disappearance of 2.6 billion XRP has forced the market to pause, to question, and to reevaluate what might be happening behind the scenes. And whether you're a long-term holder or a short-term trader, moments like these demand attention because they often precede the kind of moves that redefine market structure. What makes this event so powerful is not just the size, but the implications. We've explored the possibilities, from institutional accumulation and OTC deals to liquidity restructuring and even potential distribution strategies. Each of these scenarios carries a different outcome, yet they all point to one common truth. Major players are active right now, and when major players move, the market eventually follows. The only uncertainty is the direction and timing of that move. Looking ahead, the next phase is going to be all about confirmation. The market will begin to reveal clues through price action, volume changes, and continued on-chain activity. If XRP starts to show strength, breaking key resistance levels with conviction, it could validate the idea that supply has tightened and demand is stepping in. On the other hand, if we see increased volatility with downward pressure, it may suggest that redistribution or strategic selling is taking place. Either way, the data will speak. It always does. The key is knowing how to read it without getting caught up in emotional reactions. This is also a moment where discipline becomes more important than ever. In crypto, it's easy to get swept up in headlines, especially ones as dramatic as billions of XRP vanishing. But experienced participants understand that the market rewards patience, strategy, and risk management, not impulsive decisions driven by fear or hype. Whether this turns out to be the early stages of a bullish breakout or a complex repositioning phase, those who stay grounded and informed will always have the advantage. Another important takeaway here is that transparency in crypto is both a strength and a mystery. The blockchain shows us what is happening, but not always why it's happening. We can track wallets, analyze flows, and identify patterns, but intent remains hidden until it reveals itself through outcomes. And that's exactly what makes situations like this so fascinating. It's like watching a puzzle being assembled in real time, where each transaction is a piece, and the full picture only becomes clear once everything falls into place. So as you move forward from this video, keep your eyes on the bigger picture. Don't just focus on the headline. Focus on the evolving narrative. Watch how XRP behaves in the coming days and weeks. Pay attention to liquidity, sentiment, and momentum, because whether this event leads to a breakout, a consolidation phase, or something entirely unexpected, it has already signaled one thing loud and clear. The XRP market is active, dynamic, and potentially on the edge of something significant. And with that said, it's important to remember that everything discussed in this video is for informational and educational purposes only and should not be considered financial advice. The cryptocurrency market is highly volatile and unpredictable, and you should always do your own research before making any investment decisions. Never invest more than you can afford to lose, and always approach the market with a clear strategy and proper risk management. This is XRP on Moon. Stay informed, stay sharp, and I'll see you in the next one.